Senor Ortiz, we are live. Are you ready to kick this thing off, brother?
Yeah, let's do it, brother. Let's go.
Let's do it. What to do, KTTV? This is KT, and I'm coming at you live with another episode of the AdminisTraders Podcast. I am one half of your host with my co-host,
JoJo, baby.
Come on, man. Well, was the what? What to do, man? Look, woo, brother, we are here another Monday. Market has been woo, it was real today. It was real. Once we look at this heat map, y'all will see exactly what we're talking about. But other than that, how you doing, my brother?
Man, look, we are almost out of there.
Ooh.
Our time has just gone by this year.
Look, man, and I'm not gonna lie to you. They said the older you get, the more that you keep doing the same thing over and over, the less that you think about it, which makes time seems like it moves faster. Because now you're not making any of those extra moves or doing anything out of the normal. Then now life is just going, you unconscious for most of the day. That's why they say, man, you got to mix it up, man. Find that life, break them memories. So yeah, brother, it has moved very fast. I'm not gonna lie to you. You know, the ALC is man, end of the year, man. I think out of 2 years, bro, I have my 5th fight, man. You know, but other than that, yeah, everything has been very kosher, but it is getting real at the end of the year. But we're gonna keep pushing, brother. I'll tell you now. The crazy part is before we just got through, y'all, I lost my Facebook. I don't know what happened with the Facebook account, but I can't log in, so I could not share this. So Jose, man, I think he may have shared it on our administrators page, but yeah, man, it's real out here in these streets, man. I don't even know what to do next, bro. I don't know, man. Like I'm just gonna be on Instagram or something, man. Golly, man. Facebook, show me some love, man. Now, man, I guess in the news, we got a big week coming up. We got some FOMC minutes coming out Wednesday. A bunch of Fed speakers. I think it may have been like 12 speakers between today and tomorrow.
Mm-hmm.
Thursday, we got maybe PMI, something like that data, jobless data. That's gonna be coming out. We got a long week ahead of us, brother. Man, so how you doing, man? You taking it light on the trading or what you doing?
Well, I think today, you know, I made some moves because I had some that expired today. So I made a quick cash.
Yeah.
You know, quick 300 to 400. But then the rest of the day, man, was spent, you know, kind of side-eyeing the market, but mainly focused on all the moves we're making at work.
Yeah, man. Closing this thing out.
Yeah, class lists and, you know, trying to get that done. But I was able to pick up some puts. We'll talk about that later, but, you know, I picked up some SPY puts because I think we'll have a little bit of a down coming up here pretty soon. So once we get into all that, you know.
Man, I hope not too soon, no, because I did just load up on some cute. Hey, and some SMH. God be with me. We talking about a lot of money on that. All right, so man, I guess the biggest thing is one other place that the market is heating up is the crypto. So let's jump into a little bit of the news and we're gonna talk about this crypto. All right, into nice news. Let me see here if I can get to it. All right, this is what we're talking about. So if you don't know, matter of fact, let me go back and do a little background knowledge on it before we even jump into that here. Oh, I could have just changed up the screen on you boys. All right, so if you don't know, all right, can you see that? The ether screen?
No.
Okay, let me add it to the stage. Bam, there we go. Okay, so for everybody that doesn't know, this is Ethereum. It's kind of not kind of, but it is a coin, crypto coin, the same as Bitcoin. So with this, let's see here. Okay, so with this here, we have big moves that's coming up. Bitcoin recently was accepted by the man. Who is that, man? I almost said SEC. Who is this? Who is this, man? The people. Who is that?
Isn't it the SEC or the FCC?
Oh, there's the SEC, man. Look, the people who let money go and flow through the country. Them people right there. So recently, they approved a Bitcoin ETF. They said we will recognize this as tender, and so therefore they accepted it to be traded on the market. What happened as of late? Because after that, everybody said, "What's next? Which one is going to be next?" And they all felt that Ethereum will be next. Look at this back up in January 23 over down here around $1,500. My God, Kendrick. Okay, so with this going over the years, if you look at what's been happening with Ethereum, it has been on the decline. You think about right here, we're at 1539. As of today, we are at 3689. Today, it had a super move. So today it moved $27. And let's talk about why this 27.30 and counting happened today. And that's what we'll look at inside of our news. So, all right, it says Ether ETFs filing, according to who is this here? CoinDesk.com. ETFs filing process sees abrupt progress through approval, but it's not guaranteed. So what's happening is the Securities and Exchange, SEC. So the SEC is now looking at, once again, what crypto will be next. Ether is next in line. It has the most volume. It has a lot of the big names. A lot of people already bought into this. And so some of the highlights from today says that they asked all the expiring exchange traded funds or the ETFs to update their 19B4 filings ahead of a key deadline this week. The SEC had previously been expected to reject the Ether ETF filings, but while there's no guarantee of approval, by them asking today for people to update the filings, it suggests progress is being made to the upside. So the exchanges that want to list and trade shares of spot Ether, ETFs are abruptly being asked by regulators, like I say, to update the key filings, which means that you could see an official ETF that is traded everywhere. So that means more ETFs will be popping up. But until then, this is what I want to talk about in the news. All right, let me show you this. So this is ETH, ETHE, ticker symbol ETHE. Today, ETH went up by $5.51 just off this news. People, there was a time when Bitcoin was $3,000. That was a time.
Mm-hmm.
It was super long ago, but there was a time. Now, today, Bitcoin, along with this news, topped $70,000 per coin. Man, I think I'm gonna buy me a coin, man.
Like, you know what? I think it's not that far-fetched of an idea.
Yeah.
Think about it, because let me, since you're talking about Ethereum, I just want to put it in simple terms of right now with Bitcoin being over 71,000. It did jump today, as did Ethereum. We have a $1.4 trillion market cap for Bitcoin, sitting at 3,000, almost 4,000. We are sitting at a $400 billion market cap for Ethereum. With that being said, if we moved, to a market cap of Bitcoin, you could see Ethereum at around $11,000 or $12,000
quickly.
While it may never catch, but by the time you think about it in perspective, a $1 trillion market cap for Bitcoin is comparable to your big names like Apple, Microsoft, who are getting close. But if Ethereum hit 1 trillion, by the time that happened, who's to say Bitcoin won't be well over $100,000? So then that will push the market cap of Ethereum to an even higher ceiling, which we could possibly one day see Ethereum 40K. So with that being said, there's nothing wrong with putting your money into Ethereum. Now, I would wait for a little bit of a pullback, like they say, all the news, but I would wait, but definitely Ethereum, Bitcoin, something that you want to put your money in. I'm heavily invested in. Now, remember I said the word invested because I am holding it, but I have a lot of crypto that is dedicated to the AI sector and the gaming sector. So, I wouldn't put it past Ethereum to keep climbing.
Yeah, wouldn't put it. I'm telling you, man. Give me a 3,000 flag. I'm gonna do it, man. Give me one. So this is the last piece on that. Today, another reason why Bitcoin and Ethereum move so much. Jack Dorsey says the price will surpass $1 million by 2030. What you think? What you think, man?
Well,
I mean, hey, man, I believe it too.
That's pretty. I mean, that's what, 6 years?
6 years.
I mean, it's been around since 2009.
2009.
The very first person bought Bitcoin at 9 cents.
9 cents. But he probably
look,
dude, he probably somewhere on an island. Like nobody's seen him since probably 2012.
I want to say roughly 5 to 6 years ago. Yeah. Bitcoin was the price of Ethereum at around 3,500, and my boys said to me, "Man, let's each put in 1,000, man. Let's get us one." And we didn't do it.
Didn't do it.
That was almost as bad, or probably worse than at one point. I was so crazy about Tesla. And you think about now how much $1,000 is. Yeah. You think about, just having $1,000, and even if you have ways of getting $1,000, you could get money out of a credit card, get $1,000. I remember back, when Tesla was $90. And I told myself, let me get this money and buy me 10 of them. Yeah. Dude, within 6 months, that damn thing was well over $1,000 back in the day.
Well over 1,000. Come on, say, look, man. Hey,
that's
man,
almost,
we all done did.
That's as bad as having 100K and watching it sit there.
Hey, man. Hey, look. Hey, man, they say in love, man, it's not the ones that you had, man. It's always the ones that got away, man, that you never stop thinking. Golly, bro. Come on, man. All right, man. Well, that'll do it for the news, man. Let's take us a quick break. And then when we come back, we'll look at our heat section. Hey, man, we killed that time. We on it, man. We'll be right back, y'all.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
Oh man, look, man, it's just so crazy. As soon as I got through getting ready to sign in and share the video, man, this is shout out to this also teaching the lesson, y'all. From this point, we might be going live on kttv.com. I own that platform. All right, here we go, man. This is what we gonna do. Let's jump into a little bit of this heat check. All right, y'all. Let's start today. We'll start a little different. Only for the simple fact of I don't have the pieces pulled up that I need, but now we'll do them. Let's do it. Where are we at? Greed. Woo! We told y'all what was gonna happen last week, man. I vividly remember us saying we are in a holding pattern. Right now, we got to figure out which way we gonna go. Don't make too many moves unless you going low at a good price, because just like this thing is a greed, it could have bounced over to fear. It could have got rough, but it didn't. And so now people is back out in these streets. Man, and they spending that money, man. What you thinking, Jose?
I'm thinking the video earnings are going to drive the market up. I think we're going to see some extreme greed here pretty soon. And then we are going to have a free fall. I'm sorry.
Free. Oh, that wasn't a free fall. Hey, well, let NVIDIA go and push that thing up before they go. I just bought me some more today. I hope. God. All right. Look, so remember what we said, y'all. This is not the only tools that we use. But when you're able to look at this fear and greed, understand what is the sentiment of the market overall, how are people feeling, then it just helps you kind of know where to go with the money. So remember what we said. This is buy. You better go and get you some. Buy, but just kind of start watching. Don't watch your prices at this point. Hold. This is where we were. Now over here, you got some people out there still buying, because if we look at our VIX is still low. So people are still buying. But by the time we start getting over here to this extreme, better start lightening up them positions, because when, like Jose said, when we get ready for a free fall, I guarantee you this is where we will be, somewhere between 75 and 100. But right now, though, yeah, I'm going to be greedy too, y'all. I'm going to be greedy. We'll be greedy until we got to change and pivot. All right, let's look at our next piece of this, which will be our heat map. So, a lot of red today, Jose. What you thinking, man?
You know, same thing. I think we're getting to that part. You know, I think we were overextended on a lot of stocks last week. You know, Amazon and Meta had some good leverage last week. I know Google did as well. I think one of the ones that was down last week, you know, Microsoft and the banks were up last week. So I think that kind of washed itself out this week. You know, you still got NVIDIA was kicking butt today, but I think somebody knows something about them earnings. So I do think that if we have a little bit of a pullback on NVIDIA tomorrow, I do think with them earnings drops, I think we're going to move the market up, but I could be wrong, considering if we have another green day tomorrow of NVIDIA. I think we could see a quicker sell-off, even with great earnings or great publicity, or, you know, whatever they speak on. But yeah, I think today I sold a couple of Microsofts. So, you know, one of the things that we keep talking about is like always put yourself in position to buy positions that you can eventually start to profit from, pocket, and scale in and out. You know, sometimes it's good to buy one at a time and then sell one at a time. You know, I've told KT ever since we started this that it's good to have, you know, more than one, more than two. That way you can start to scale out over time and buy more if the price is lower. I want to go back to what KT was saying about this fear, and in a minute he'll go into the VIX. Today I bought some VXX. which is, ETF weighted on the VIX. And so I picked up some calls today for June because I think, like I said, I think we're going to see some movement here soon to the
downside.
Yep. I picked up some SXU, which is also an inverse to the S&P 500, which is what you're looking at right now. This is all on S&P. And then I also bought SPY puts today for June. I do believe we will see somewhat of a downturn here in the coming days, maybe next week. So, yeah.
Yeah, man. And see, that'd be the difference, man. For me, I did not buy anything to the downside yet, except for Tesla, but that's because I have such a big position to the upside. I try to hedge anything that I can, but I'm going to ride it for a little bit longer because, like I said, I put a lot of money in this sector right here. Man, I'll tell you, man. Oh my God. I like a big percentage. And also I put a lot inside of technology, right? Because I'm thinking that before it's over with, tech is just tech, right? And so they've been kind of quiet the last, if you look at this technology list right here, you don't see a lot that's going on. So therefore, it's going to be a time where these people are going to kick out. It's just, how are you finding them when it's happening? And so by looking at this chart, it tells me, okay, so I caught everything here a little early because I'm in the profit already. So that means I'm in a good space. Look at it start to kick out. Everybody's starting to move. I know Intel has earnings this week. NVIDIA has earnings. I'm waiting on AMD to kind of do a little quick pull for me. And I'm going to jump in there on the singles. But yeah, man, everything is rolling. But then when we look right here, financials rolled last week. So I'm kind of worried about this sector. Once we get out tonight, I think I'm going to take a few minutes to do a little bit more research for JPM. I know we'll talk about JPM today. JPM this time last week was about $204. So big $10 drop, 4.5% today. So we'll talk a little bit about that, kind of look at the charts. That will be one of the plays for this week. So we will talk about that. Berkshire 413. Gosh, I can't believe it. But yeah, so Citigroup, Bank of America, everybody's on the struggle bus today. I think I'm gonna do a little bit of that Citigroup, man. I think it's still a good price. It's the best price for me, and they dropped 63. So yeah, I think I'm gonna look at a bit of that Citi, man. Yeah, because I just want to see what's happening here because I think it's a very undervalued bank, and so now that I got a little red in these banks, let's see what we can pull out. And so that's it, man. I guess let's look at our next one. And the last piece of that, as we get ready to wrap this thing up, is our VIX. So let me get that VIX in for us. All right. Here we go. For the VIX. The VIX is at an all-time low, people. All-time low. If you look at the VIX year to date, matter of fact, let's go over the last 5 years. So we look at the VIX over the last 5 years. We got a hit down here, right? And then we got a big jump. We go a little bit more. We got a hit down here. We're going to stay here for a little while. Then what happened? Boom. We got another big jump. Little hit down, jump, hit down. So what's happening? We just had a big jump. We back down here. And so this is what Jose was talking about. When you look at sheer history in the stock market, right? We don't say we can predict, but this is almost a pattern. We look at patterns in elementary school. So if we look at this pattern and we see that the VIX, when it goes down, that's a good thing. When it goes up, it's rough. We've had a little stagnation right here where we was going through, then boom, we just had a big pop where we got up to $15. So now what we got to do next is coming down, and we will look at where we at today, $12. So Jose, you said you bought some of this VIX today, huh?
Yeah, I bought some VXX, which is the weighted average for, it's an ETF that goes with the VIX.
So once this goes back up, it'll be rough for the stock market, but this VIX will probably go back up once things start getting a little crazier. Because we know.
And my call is an actual $12 call.
Okay. And so because we looking, 52-week low is $11.81. The 52-week high is $23. Right. So this is the move that we can look at. We almost down here. So this is a good time we would kind of getting our money. And then hopefully we can get rid of it at like 18, not hopefully, because I got more to the upside, but maybe this could happen. So then you got to be ready for all facets, And so I would tell you, experienced traders, like Jose, he went and got that. It's kind of risky because, like you say, you're going against the trend. The trend is going up, but we know nothing goes up forever, right? And so then it's just how much do you want to front load? I'm thinking though, this may be the time, because if you look inside of the S&P, NVIDIA is around 5% of that average, right? And so then if NVIDIA falls, that could take a lot with it. I mean, I'm just gonna be real with you. A lot. Just think about everything inside of this semiconductor sector is green. Everything. If this go, man, it's gonna get real in these streets.
All those will follow. Your SMH will follow, but not only that, the SPY will follow and the QQQ will follow, because the NVIDIA is part of the S&P, as you see it here on N. It's part of QQQ. It's part of that SMH. But everything that's related always loves to go in tandems.
Yeah.
Can't figure it out. You could have one stock that's a beast mode, but if one of its kind is down, they're all gonna be down.
They all gonna be down, man. And so I'm kind of worried, bro. I'm very much worried, man. But I'm thinking that NVIDIA gonna pull it out, but the expectations is through the roof, bro.
Yeah,
like it's so high for them, and so
if they mention,
you think about manipulation.
Yep. See, if they mention anything more than a sentence about AI, people are going to, it's going to fly. I believe it's just, But I think with it up today, it could be down tomorrow just to make ground for it. Yeah. But I think we're getting back to that $1,000 area where, I think it was $1,000 a little bit long ago.
Yeah, it hit a little bit.
And so I think that's, like I said, I think that we're going to drive the market. I think it's going to take most of the market with it. And then I think we're going to have a good chunk to the downside coming up pretty soon. Hopefully it doesn't last long. It's a quick pullback. Yeah. We get back to
5%.
But anything, So that's, and I was going back to what KT was saying too about this call that I made. It's, not quite at where KT likes it, but it's at a 43 delta. And it has a 6,400 open interest. So that's why.
Oh, yeah. A lot of people thinking the same thing.
Yep. So that's why I kind of picked it up today.
Yeah. I think so, man. Especially when you get a 40 and up delta, man. I was looking at one the other night. That thing had an 80 delta.
Oh.
But that thing was going to take half my account. Shoot. Hey, now look. All right, man. So let's take a quick break. What we'll do, we'll get into some of the recap of some of our patterns that we got going up. I've been looking for that cup and handle all week. I think I saw one on one of my penny stocks today. I say that's Ortiz, baby. All right, so let's take a quick break. When we get back, trading with Ortiz. All right, let's do it, baby.
I love the chase and the hunt, and I set the pace when I...
Hold up, baby. Got the new intro. Woo! Hey, all right. So, man, okay, Ortiz, you gonna share it up, man. So if you want to share the screen, man, and take us to the promised land, I'll add you to the stage.
All right, man, y'all got it. Can you see it?
Yes, sir. Hold up, wait a minute. We loading.
Boom. Here we go.
Yes,
all right,
sir.
so quick review. We were just talking about those candlesticks. You know, that's what they look like. Keep in mind, you want to keep practicing what those candlesticks look like. Keep looking at all those charts for the candlesticks. You know, try to get a hold of this book. It's going to talk about the cup and handle that we talked about last week. You had your cup and handle. It's considered bullish. You have your cup and your handle. As you can see here on the screen, there's your cup, there's your handle. All right, so today what we're going to talk about is the head and shoulders pattern. This is one of the most reliable trend reversals. And there are two types of head and shoulder patterns. As you can see here, there is a head and shoulders and there's an inverse head and shoulders. Okay, so the head and shoulders pattern. The head and shoulders is considered bearish. The inverse head and shoulders is considered bullish. Again, here's your head and shoulders. See how it's to the downside. Here's your inverse. We got the upside. Okay, there are 4 parts of the head and shoulders. I'm going to touch base with these quickly. We'll put these on the site on the site later where you can see them as well as cup and handle. But we have a left shoulder, we have the head, we have the right shoulder, and then we have the actual neckline. So here we go. The left shoulder, when we're talking about a head and shoulders pattern, head and shoulders pattern is bearish. That means we're about to expect some to the downside. We have the price rises at a peak. So here we go. So this is our first left shoulder. See how this price rises. Then we have a head where the price rises again. Because once you see this right here, it says that the price rises to a peak and then it declines. So we declined right here and then we rose up. So the head, the price rises again to a higher peak, and then it also declines. Now the right shoulder is where it rises again, but this time it's a lower spot than the first peak, or lower than the head actually. And they're usually almost identical on where they are. So if you put a trend line there, you would be able to see that the shoulders kind of touch, and then we go to a decline. Now, if it breaks, once it breaks this trend line and we have the last part of the shoulder here, and we break that trend line, that's usually when we continue to the downside. And then it's confirmed when that price is rejected at the trend line that is set for by the neckline. So as you can see this neckline right here, that is going to be the resistance after you had your 2 down shoulders. So that's where you get to confirmation and off we go to the bottom. So now the head and shoulders, your neckline is the trend line where you draw the 2 troughs. So you got your 2 lowest troughs, bam, bam, connect them. And the breakout is a confirm when the price breaks below the neckline after forming the right shoulder. So here we got the right shoulder, we break below. There you go. We had a little bit of a gap up, but nonetheless, this still broke that trend line to the downside. And then we did not break that support, that resistance right there. So we continued to the downside. But this is where your downside actually started for your head and shoulders. So now let's talk about the inverse. So on the inverse, you have the opposite. So your left shoulder declines to a trough. So it declines. We're going down because this is a downtrend. And then we bounce. So there's a bounce up in here. And then the price declines to a lower spot. So this may look the same, but it's going to be a little bit lower than your first shoulder. And then the price does bounce again. And so then, you come down and you decline to a higher spot than what it was before. And then it rises. So its neckline is drawn between the two highs. So we got the highs, and see how it doesn't always have to be straight, because this is more like a trend line too. When we're doing patterns, not everything is straight like these are here. So there we go right there. And your breakout is confirmed when the price breaks above the neckline. Now, head and shoulders are very typical of the breakdowns in the stocks. Very so when you see a head and shoulders pattern, it is almost always a confirmation of something that's about to break down. So here's that graphic again. As you can see on the head and shoulders on the left, you have your two shoulders, you have your neckline, and then you have your head. And then if you look to the right, you have your inverse where you have your shoulders and then your head. But it's all toward the bottom because we're going to look for a breakout to the top. It is easier to spot a head and shoulders than an inverse just by looking at it. As you can see on the graphic, that it is definitely a lot easier to look at and spot the head and shoulder. As you can see here, you have your up trend, and then you have your first shoulder goes down, then it comes back up, you have your head, comes back down, you have your shoulder. Once we broke this trend line, you see how we were off to the races to the downside. So we have, so we keep going, we break down up here, we come down, we bounce. If you notice, this trend line also had a gap to fill. So this gap right here was filled, and then we bounced because this was now our area of support. And so we filled that gap, we bounced, then we came back down and we found our area of support again, and we bounced. And then we came back down, but this time we broke the support. And once you broke or break that support, this is kind of where you want to start, buying, because it broke the actual trend line there, the neckline, and now we're off to the races to the downside. Simple.
Hold up, man. Go back to that one real quick. What if we could recognize, and I don't know if this is it, man, but we say double bottom to the left hand side over here, right?
Yep.
So then the double bottom catapulted us up. Then we got the head and shoulders.
Yep.
Because there was a lot of indecisiveness. And then they said, you know what? Let's take it back down. They took it down, but then the head and shoulders taking us down and going into the cup and handle.
Look at that. Look at you.
Hey, man. Come on, man. Look, bro. All right, man. The money's in the charts. All right, man.
All the time. You know what? This is what KT was talking about, double bottom.
Yeah.
Bounce. But if you look at this area of resistance, we got there and boom, we came big red candle. And then we did bounce. Now we came back down, filled that gap. So there's a lot of things going on here. Double bottom, resistance, then we got a neckline, but that neckline is part of a gap that was filled. So you got to start looking at the chart in those types of terms. This is just a visual so you can see it because it looks like a head and shoulders. Again, you have your neckline with your price movement, your shoulder, your head, your shoulder. Once it breaks that neckline or it breaks this confirmed area of support, we are down to the bottom. Same thing as if we're looking at the inverse where we had a breakdown here, but then we bounced back up to this support that became your trend neckline slash support. We broke back down, came back up, but once we broke it, because we broke it right here, this is a double top right here. We broke the double top. So that's why you can expect it to keep on going to the upside because that double top was broken. And a double top usually means that we have a breakdown, which it did. It broke down right here, but then we had our first area of support and we bounced off that support. And now we're back to the double top. We didn't form a triple top. We broke the double top. If you look at this from a candlestick point of view, you got your uptrend going up. Bam, we came down. Now we have this gap that was filled right in here. See how that gap formed that first shoulder? So we bounced, came back down, hit our double bottom. We broke it again, but now we got another line up there at the top that we have for our resistance, and it didn't make it. So now we come back down. Once we got to this double bottom, now it's a triple bottom. See how it broke? Because normally on your double bottom, you bounce, and it did. But now we're back to the double bottom. And usually on a triple bottom, we bounce, but we didn't. So we broke down more to the dark side. Ooh, to the downside. Hey. And you can see, but look what we got over here. We got another, we could draw this line of support to where we could see what would happen, because that's probably, you want to see, it's probably going to fill that gap to the bottom. And now when you look at the same thing here, left shoulder, bounce up, back down to the head, bounces back up to your right shoulder, or starting the right shoulder, and then bam, off to the upside, because now we've hit here, and now we filled that gap again. So now we got another gap to fill right here. So this actually would be where I would look to sell, because you've got a gap to fill to that spot right there. So, but yeah, so that's what I would look at. Here's another eye on it from a chart lookalike. So you want to look at it from a chart view. This is Netflix. It's kind of old, but you can see the way the candles are formed on that Head and Shoulders. And then this is just a recap of what I was just talking about with your Head and Shoulders, with your shoulder, head, shoulder to the downside, and then your inverse, which is your shoulder, head, shoulder, and then we're going to move to the upside. You have your necklines, you have your trends, you have all these different gaps to fill. You've heard us talk about support. You've heard us talk about resistance. That's why it's important that you think about those pieces, because once you are in that particular area, that's what happens. And you can see them in a pattern like the cup and handle and the Head and Shoulders.
Most definitely. Okay, man. Come on, man. Look, y'all, if y'all don't know, we said so many times, man, the money for the stocks is in the charts. It's only after you know what you're looking at can you decide when to sell, where to sell, where it will go up, where it will go down. All of that is found out by learning how to recognize those patterns, how to look at that chart and look at the price action of that stock. Without that, you're simply not gaining the fundamentals, which means if you try to get out here in these streets and you're just going blind and guessing, like you wouldn't drive with a blindfold on. So don't get out here in these streets until you've watched all the episodes of this podcast and got you some game here. Man, I think that was a good one, Jose. Today, double bottom, double top. Those are, you may see those more prevalent than the cup and handle, right? Because those stocks are always making bottoms or tops, and 9 times out of 10, they will react to that, right? So yeah, that's another one, man. All right, what we'll do, let's take a quick break. Then we'll get into some of the play calls for this week. Jose, if you got anything, you're welcome to join in. Let me know. Other than that, man, we'll look at this chase and we'll jump back on this ETH. We'll be right back. right, y'all. Welcome back to the AdminisTraders Podcast. I am KT, and this is
JoJo, baby.
Hey, look, y'all. We went through the podcast so far. Got about 15 minutes left. Talked about our patterns for today. So last week was a cup and handle. Today was a double top or double bottom pattern. All of these, either when the market is going up, you think about your cup and handle, is a bullish pattern. So you'll see that thing round out, that the handle going to drop and then it take off. But if you're looking at a double top, and then you will see that not double top, double bottom, you'll see that kind of same thing. It'll kind of do that little pullback, boom, and it's gone, right? Because it's almost tricky. You think that top here, you think it's about to head for another one, then it bounce back on you, then I'm gone. So same way when it's going down, to the dark side. Because when that money is leaving, it is still very much to the dark side. So it's going to come down, make you think it's going up, boom, it's gone back. You never see it happen so fast. So today, we're going to talk about one of these stocks that did really have a fall down. So I'm pretty sure they seen a double top somewhere because they headed for the bottom. So I want to look at Chase Bank's stock today. Let's see if we see any news on why they took such a big plunge today. What they say, so the biggest thing I saw is always when we talked about this, and I'll share this with everyone so they can see here. Bam. Jamie Dimon, CEO of JP Morgan Chase for as long as I can remember, probably as long as I had an account there. He signals that retirement is closer than ever, striking a key change in messaging during the bank's Investor Day. So they did have Investor Day, big event. The ambiguity of Dimon's plans has made succession timing at JP Morgan one of the persistent questions for the bank investors and analysts. Dimon is 68 years old, and so he said already that we're on the way, we're moving people around. So I don't know if he's leaving to do something different or if he's just getting out of here, but he says that the timetable isn't 5 years anymore. So things could get a little crazy over here. So what I am looking at for this week is going to be JP Morgan to the downside. All right. So let's kind of look at JP Morgan a little bit, kind of see what, man. Oh, wait a minute, I gotta find that thing, y'all. I'm looking. Man, do you see that? Oh, bam, there we go. Bam. All right, y'all, let's go over here to the charts. So if you can look at JP, it is $1.95. But if we go back to our days, and we can just go back to, let's go back to, what is this, April. So we fall off the cliff right here. So we came up to 196. I want to say this was post earnings. Bam, you see this big gap? Look at this big gap right here. Boom, it takes a plunge, 188. That means people are selling, and then all of a sudden, you see the selling get a little weaker, people start buying, and then what happened? We head to the hills. 191, then we get a little stagnation. So now we just kind of picking around here. Then what happens? To the moon, baby. This is the one that I bought in here, 192, but I probably sold by the time I got here, and then I missed all of this move right here. But 204 is where JP Morgan started today at, y'all. $204. Look at this, 205.91. That's the top of where this candle was, where this candle started. So now we are down here at 195. Look at this candle. If you know anything about stocks, you know that this is not a puny candle. This means somebody with big money said, I'm unsure about what's happening with Chase. I'm selling, right? And so what happens is once the whales start to sell, everybody who watched this thing run up all the way from over here to over here that's holding just like they did, I'm thinking they're going to sell too. So let's come over here. Let's look at our 15-minute. All right, let's get a little bit back. We're going to go back to our last chart. But look over here. We started our decline. What our EMA is telling us that we are now officially on a downtrend. This was one of our VWAP lines here. Well, we broke two. So we broke two VWAP lines. That tells you that the selling is accelerated. So let's go back. We want to look at our daily chart again. This is what I want to say. All right, here we go. Now, I said that I want to look at this for going down. We got news that has affected our atmosphere. Remember what I said? Big things. What's going on in the world around us? What's going on with management of that company? What's going on with the stock price? What do the charts tell us? The charts tell us most definitely that it's selling. Now, we know that the CEO is retiring. And then we looked at our bank sector today, which showed us that the banks are having some struggle. So that is kind of my reasoning for saying this is going to go downside. But now the question is, where is it going to go? So for me, I would not jump right in like tomorrow and say, oh, I'm buying one, right? Because if I look right down here in the short term, because this was the 9th of May. Bam, let me get to the bottom of this candle. So that's my first place of support right there, 195. Right? And so the reason we know that, let's go back and look at our chart. Let's go back and look. Look at all the fight that happened right up in here, right? We got one here, one. Everybody, we got these candles right here. Everybody had a fight around 195.11. So that's what I'm waiting on before I even say I'll think about buying something to the downside. Now, after that, then I'm going to come down and I'm going to say, okay, where did we fight at again? So now if I'm just going in quick, I'm going to ride this from that 195.11. And remember what we say, when we waiting on confirmation, we want two candles to close under 195.11, not just one. But I want to see two candles close on the 195.11. And then I'm going to take that all the way down to my next area I see, which is 190.45. All right, man. Any objections on that so far, Jose, or you think we on the money?
That's where I'm buying.
190?
I'm buying calls at 190.
Oh, you buying calls for the uptake?
Yeah, at 190.
Okay. Shoot. Because now the thing is,
I think, to be honest, I think you are spot on with your lines, and I think that if we broke that first one at 195, I would buy my first. If we went to the down, I would buy my first call at that price, and then I would buy another one if it dropped even further, and then I would buy probably one more at 190.
Okay. Man, I'm just shorting this thing out now, man. But that's all right. So
spot on so far for what I'm seeing.
Yeah. All right, let me delete this because I meant to put not an alert. I want to do a full line, draw a horizontal line. Okay, so these are the charts, people. These are some of our lines of support, lines of resistance. We'll come back over here, maybe to our 1 hour chart now. Let's see what we got here. All right, we can bring that thing. So now it takes our candles an hour to fill. So then they may be, it's going to be more of them. So let's adjust, but still looking. Same line still apply. Bam, look right here. So look, we waiting on that to touch. With the touch, we'll look and see if it's going to go up. If not, and it falls, then what is our next line of support? We'll come back down, look at everything that happened in this line right here. So we know that's a big area for us. So if it goes here, now don't get me wrong, we got a big line right here for our VWAP at 193. So it could, as you can look over here and see, even if it doesn't ride this blue line, it still could ride this VWAP too, right? Because we see all these here coming down to this VWAP line and then getting on about their business. So 193 could be sticky, but if it breaks that, then we coming on down to 190.45. So that's what I'm looking for this week. If it goes past there, then we got, like I said, we got a big order of business at 190. That's a psychological level. We see a lot what's happening in the trenches. We got still some VWAP lines right here, 190, 190.79, another one at 190.23. So, hey, right now, let's just say if it's falling, we might be heading to 190, people. Yeah. But that's what I'm playing for this week. Man, anything on that, Jose?
Well, I just want to add too that what KT did put on here with those trend lines and that line and where all that is, you know, exactly what we've been talking about. If you look at it and if you take the lines off, or even if you keep the lines, those are your gaps. Mm-hmm. And when we talked about gaps to fill, that's exactly what we're talking about. You go down to that support line and you see, okay, we hit it. We just filled the gap. Okay, it broke down even further. What's the next gap that it's going to fill to the downside? Bam, blue line at 170. If it keeps going below that, damn, what's our next line of defense? 186. That's going to be your gap to fill to the downside. But like you were saying, we're at 193 or so with the VWAP. If we break below that, I don't see it going all the way down to 180, 173. Mm-hmm. I think it'll bounce before that. But pay attention to those, because those are, like we've been talking about, those are the gaps that we fill from line to line and from candle to candle. You know, you have your gaps that you fill to the downside. So that's, and you know, like I said, if we fill that first gap and we hit 190, I can potentially see a bounce. And I say that for two reasons. One, technicals. If you look at the technicals, you can see a bounce. You just don't know how big the bounce will be. Number two, Jamie Dimon ain't gone tomorrow. He's going to be there for at least another year or so. So people overreacted to the news. They sold off. More people will sell tomorrow, but then it's going to bounce back.
But it's going to bounce back, and I'll be waiting.
They needed a reason to get out of 200, because a lot of people, like myself, rode it from 170 to 200. Yeah. I dumped last week. I had $200 calls for June. I dumped 3 of them last week. Kept my 240 calls, though, for January. But nonetheless, you know, you see things like that, and that's when you start to make your money and see it. So.
Hey, that's it, man. That's it, brother. Man, well, I think that'll do it for tonight. Awesome information, the patterns. We really cook, y'all, inside of these podcasts, platform probing each week. If you can just look at how we finding our support, finding our resistance, looking at these patterns, as Jose say, and put all that together with your fear and greed index, your heat map, that is the recipe, people. You do that because the stock is not about how many. No. It's not about getting one big move, right? You may hit a home run, but if you only got that one home run in your bag, you got a problem. Yeah. It's about doing those small, correct behaviors consistently over and over and over. And that's how you become a profitable trader, those small pieces. So getting those charts out, finding 3 lines of resistance, finding 3 lines of support, and being ready for when it jump. That's how we get ready to hunt, man. Anything, we're finna close this thing out, man. We got about 30 seconds left, Jose.
I mean, I think that you do your research and keep it simple. You know, pick, rinse, wash, repeat. If you trade 4 stocks and that's the only 4 stocks you trade, learn to trade, make your money before you venture off into doing more stocks. So,
hey, there we go, man. Base hits. All right, y'all. This is KT and
JoJo.
Hey, for the AdminisTraders Podcast. We'll see y'all next week.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTTV.